Welcome to the Trading Lounge and the Commodities report, starting with US spot gold. And on the weekly robo method, it has been triggered in as a short trade at this point in time. The reverse is 1224.3, and the Elliott count is such that the move down through here can be counted as a corrective move in terms of an A and a B and a C. That gives it a bullish count. However, in terms of bullish, and if you were thinking of going long, then you would need the 1200 as a support. You need to be above the closest, largest number as support. Generally speaking, the market is sticking to this particular number, so in turn it makes it a probability of being bullish, but we would need to see that 1200 as a support there. So we've been looking down for 5 waves in wave C here, and just drilling into that a little bit here. We've got our 1, 2, 3, 4 and 5, so it can be completed at that point. And now we're looking up for wave 1, an A and a B and a C, back for wave 2, and then a push up from that point. So if this low gets taken out here, then we've got ourselves a bearish count at that point, because this would invalidate this particular A, B and C point here. So in terms of trading this, it does appear we've got 1, 2, 3, 4, 5 up here for wave 1 off the low, and the 50-60% retracement levels back at this number here. So we can expect this to move down from here. So if you're looking to go long, then perhaps use 1195 here as a nice tested support. You could also use this level here, 1193, because 3 is the top of group 1. So if it comes down and tests here first at 1190 area, and then develops support on top of group 1, a position here, adding on to the position here, and then just holding from that point, because any move to 1200 here would see corrective pattern coming back and testing lower before it moved higher there still. So there would be swings across this level here if that was going to be the case. If I had to draw this out here, this would be the A wave here, B wave here, C wave here, and then wave 1 coming back into supply here, corrective move here, third wave and fourth wave would be through here, and a fifth wave up through to here, level these highs here, and then the retest coming back into here before seeing further development moving through that level there. But as I mentioned, if this low here is taken out, then a bearish picture emerges. The silver market, once again too, is also, if we just stay within this structure from this top to this low here, we also have an A and a B and a C wave here in a very clear 5 waves, 1, 2, 3, 4, 5, and we're counting the 5 waves down in here, so that's complete as well. So a new low through here would turn this into a bearish count here as well. So like gold, we would also need this to move up, and any long trade here would be on the medium level here, 1650. We would need support on that. That would be the long trade from that point there. Of course, you could move into it earlier through here if the development was right and you understood what was occurring here. So this pattern is the same as gold. I won't go into it, but you could look for a 61.8 retracement level there. And then when you're looking at the 61.8 retracement level, it's good to kind of work it with a whole number or an even number, or some level there that you can work with. The copper market is also a little bit bearish as well. It dropped through the 272 that we were looking at, but we expected that because we knew the consolidation on 272 was corrective. However, just drilling into here a little bit further, now that it's broken through here, and this count is pretty much into the guessing game of things to a point, because now that it's broken through here, it gives us 5 waves. So we've got 1 and 2 here. all of this for the third wave down here. Now this spike here, I'm just ignoring that, and that's where I'm getting this count for the third wave. ABC for the fourth and down for the fifth here. Yes, it could move lower through here. I haven't really drilled into that there, but if that is the case, then we would be looking for an A and a B and a C wave here. So I'm interested to see if we get that development and I can confirm this as a corrective pattern, and if that's the case, then we'll be taking this low out through here, and this would not be healthy for the material sector, and we can look to short that. So we're thinking of shorting now that we've got 5 waves here. I want to confirm the counter trend for those 5 waves as corrective, and then we can look to get a bit net short on that in that sector. The oil market is still pushing higher, so you're going to see oil stocks moving up as well, but be careful not to get too involved in those oil stocks until we can prove that we've actually got an uptrend here, because as it stands at the moment, if I've got this here, that's not what I was looking for. I'm normally sort of half organized, but there we go here. So we're basically looking at this as an A wave, a B wave, and a C wave. And our job is to be counting 5 waves up through here. So with that in mind, those 5 waves there, this is what we've been working through here, as you know, the 1, the 2, the 3, the 4, and then up for the 5 here. And in the 5th wave here, we're looking for 5 waves of 1 and 2 and 3 and 4, and then we've been looking for this to push off here. We were a little bit concerned about this move down here, pulling back down so far, but I find from experience that working with large numbers like this, that normally happens, so we need to sort of accommodate that situation. However, this little move up through here now, because our target was around 55, so a little move up here, we're looking for 5 waves up in that area there. So from the low here, we're counting 5 waves up here yesterday, and back for 2 here, and now we're looking up for 3, back for 4 here, and then up for 5, and looking for 5 waves in this area here. And yeah, so wave 4 is going to be testing 53, which is the top of group 1, and if that maintains as support, which I believe it should do, then we can move up through here further. Need to be a little bit careful, because this move down here is wave 4 here. Until we've got a new high above here, I don't know if we're going to get those 5 there, because this does count quite nicely as 5 waves down here. So this would be an A and a B and a C wave back up here, and then moving down from that point there. So it's just a little point that we need to make, and if this wave 4 breached this, say, 52 area here, then we know that we've got a bearish picture at that point, because we're looking for a short, but we need to confirm when to short, and the only way we're going to do that is either 52, the pivot within group 1, 2 and 3, the pivot center, as a retested resistance, and that sets up a short trade, or from up here, if we can identify a very nice clean impulse wave down, we can look at the counter trend then and look to short it from that point there. Just drilling in here a little bit, so from wave 2 here, we've got 1, 2, 3, 4, and looking 1, 2, 3, 4, 5 for the third. Now the third wave is a little bit small here compared to wave 1 here. So that's a little bit of a concern, and if that, let's just have a little look at that one here. Don't need to be totally lazy. So that one there, that's the length of wave 1. And this would be the length. I mean, wave 3 is normally the longest and strongest, but you can see here that, you know, if we, well, this whole third wave, it doesn't look like it's going to make it to this area up here. So what that would be telling me that wave 3 is going to be shorter than wave 1, and wave 3 can't be the shortest in the sequence. So that means that wave 5 is going to be short. So if I took a bit of a guess here, I could look at this area here as from this low to the whole of wave 3 here as that point, and then I could just, using trend lines here, grab 60% of that third wave to here, and then put that here. So we may not make it to the 55. So the 54.50 is a very probable area here to go to. So after we've got this A, B, and C here pulling back into the 38.2 retracement level and whatnot, then the move up here may not be that much at all. It might be just something like that, not reaching the 55, just coming in around here somewhere, because it will need to be shorter unless I've made an error in wave 3 here. And so far it all fits and counts nicely. So anyway, just because I've mentioned 55 before, don't lock on to that, you know. So anyway, let's see. We're working through it, and we'll look at the top and we'll work the other side. The platinum market, while we're here as well, we're looking at, the position's been on the weekly robo method, weekly robo system 1, method 1. We've got clicked in as a short trade here, and the reverse is up here now. Now, I do think that this has got possibilities of being a bullish move up here, and in that light, we would look at it like this here in terms of, well, we've got this move up here, which we can count, well, as wave 1, or an A wave and a B. So we've got 3 waves up here, and I've counted them in a positive light in terms of 1 and 2 and 1 and coming back for 2 here. But if this low here gets taken out now, because as it counts at the moment, this is a nice A wave, a nice B wave, and a completed C wave. So we'd need to see that up for 1, back for 2. We'd need to see it move up from that point, okay? If this low here gets taken out, then we've got the bear market there. It would be on the right side of it. So even though I could have waited here for the robo method, I'm just running the robo method as cold as ice, and that's that. So if it gets triggered short, with this short, and that's that. But if you wanted to trade otherwise in freehand, then this would be this is looking like a bullish count. But really, this top here would need to be taken out through here to actually confirm that we're in a powerful third wave up of a third wave here. So we don't have that evidence yet. It would need to take that high out here to do that, and it's not there just yet. But anyway, we're sort of looking at it and working through it, and the robo method would turn us long at the right time anyway. So it's not such a big deal. But yeah, that's that. So right, into the grains. So soybeans. So the weekly robo has a short, not a problem, that's fine. In terms of the wave count here, I've adjusted it a little bit. We were looking actually for a wave 4 here, but I've gone back over in the detail, and it appears that this is there's a wave 1 and 2 and 3 and 4 in here, with an extension in the 5th wave here. So we're looking at the 38.2, the 61.8 retracement level, which brings us into this sort of area through here, just above that. So if I just clean that up into there, so it can move that to that distance there, but we'll just count the waves up here. So that's what we're going to do now. And in counting those waves up there, we're looking for an A, B, and a C. So we've got the A wave, we've got the B wave in here, and the C wave will be 5 waves. So I can see we've got 1 and 2 in here, and this is probably the 3rd here, and the 4th here, and the 5th here. So I don't think we're going too far. We'll go to 9, 6, 5, the first level in group 2 here. So that's where I think this rally will take us to here, before rolling over into wave 2 here. That's the drawing there. And whoops, I don't have a smaller version of that at the moment, but anyway, you get the picture. So we're just looking for this to top out in here. It may cover that little gap there. Nice if it does, then it doesn't have to sort of come back and deal with that later. The wheat market, we got triggered short here on the Monday. That's fine. Our reverse is here. At the end of the week, we'll look to add to this position. I do like this this trade. So if you're looking for a trade, then this is fine here. I expect these lows to be taken out, and also the beginning of another larger trend to the downside with the US dollar pushing up. So yeah, this is one of them to focus on, and corn's the other one too. But the wheat's a little bit better in this case, but. Look, anyway, in this case here, we're short at 383. We've added at 372.75. I know 372 is going to give us some support here, and we can get a bounce off here and all the rest of it. So we've got some grief to work through here, but that's okay. Now, in terms of the Elliott wave pattern here, it's just not clear. I can't give you a clear indication. I did say that under 372 here would click it into a bearish mode, but until it takes this low out here, this low here, then it would destroy. See, this is a 5-wave structure up here, okay? Now, I've got it as an A and a B and a C here for wave 2, and we'll be moving down from that point, but I can't confirm that until this low gets taken out here, because this C wave up here is actually 5 waves, and it's from a low here, so it could very easily be up for 1, an A and a B and a C back for 2, and then moving up from that point there. So until this is taken out here, then we've still got a bullish count on the table. So I just don't know. Yeah, look, we're short. We're under 400, the closest largest number. So we're on the right side of things. We just need confirmation that we're doing the right thing. So that low there is that point in there. So the coffee market is triggered in short here, and we know that this particular pattern here is corrective. So we're just drilling in here a little bit. We know it's corrective because all of this pattern here, you know, it may get bigger and uglier, but it is corrective because we've got overlapping wave structures. Even from this low here, we've got this A, B, and C here for wave 4. So we're looking at this down for 1 here, back for 2 here, and then 3, 4, 5 to the downside. I don't know if I'll go all that way down, but we need to get a bit of confirmation on that. But as it stands at the moment, we're looking at this move here as down for 1, and we're looking for a rally to come back. So we could be looking at 50-60% retracement level here, and we'd have to expect a bounce off these lows here anyway. So it can come back to 140 here. We may have to adjust the stop because I've got the stop a little bit low here. We might have to bring it back to 43 to cover that. But yeah, that's that. So I was looking at it like this here. So 1 and 2 here, then 1, 2, 3. Yeah, I might have made a mistake here. But let me just double check. I'd have to pull that apart. It's not that it's a big deal anyway. Look, even if we do get another move down here, we still have to expect this rally here for wave 2 before we see any downside. So we're just going to accommodate this bounce here and look for this one here. We know that we've got a stronger US dollar, generally speaking, in an uptrend, so it is placing pressure on these commodities. Now, the sugar market has pushed a little bit higher and has clicked in a new order here of adding at 13.11. So even though we think this is a corrective rally, that I can't confirm that either yet. So we're basically, the robo method's pushed us onto the long side, and that's that really. So yeah, we're just going with the trend there, but coming back into this trend here, we can see that we've got this long trend down here. We're looking at this as wave 1 and 2 in here. All of this is the third wave here, and this is the fourth wave at the 38.2 retracement level. So even if it's above 13, that's fine. We're still kind of expecting it to fail here, but I don't have any evidence of that just yet. Not that sort of concerned about it. I just want to give it some time here, establish itself as support or resistance here, yeah, and pick it up from that point there. The cotton market, we're long in this market and looking to add on this new high up here. We're a long way from that at the moment. But in terms of the wave count here, may not add to that too, by the way, but we'll just have a look at this first. So we've got, I'm looking at all this as an A and a B and a C wave up through to here, okay? And in that C wave here, we're looking at 5 waves, 1 and 2 and 3, and still in the 4th at the moment. And I know that 65 is a strong number. It's a very strong number, and it's a medium level. And the market's going to be swinging across here, and it might overlap wave 1 here. But I'm still going to stay with it as a 5-wave structure to the upside. And I mean, that's what big numbers do. They can skew the wave count a bit, but yeah, there still has to be another move up here. But because it didn't stop here, it's got like an overshoot pattern. So normally the distance above will be the distance below that it will come to, but that's really coming back into the price territory here. But we'll just see how it sits at deeper in here in demand and support area here. Yeah, not ready to give this up. Even if we do get overlapping wave structures from wave 4 here, I'm still going to stay with the wave 4 because we've got this previous move up through here. So that means that it's not going to end with 3 waves here. It has to end with 5 waves. So it might get messy, but we have to stay with that. The orange juice market, we're short at 121, the reverse at 124, we're added at 111.3 here. We can expect a rally off the lows here. Yeah, so let's just have a bit of a look at that. If it was going to rally here, this is where we'd be looking at. It appears we've got a little 5-wave structure down through to here. So we'll be looking for an A and a B and a C, pulling back into the 120 area and then down from that point there. So, yeah. The cocoa market, we're long here and we've added at 28.33 here, and our reverse is a little bit lower here, simply because we wanted to accommodate a corrective move back if that's the case. So I don't need to do that now. In fact, I need to make an adjustment there. We can put this back up here where it should be. So that low there is 7.48, so we can put that at 27.47. Don't particularly like stops at 7. I prefer 6. So, but in this case, it doesn't matter. So, so that's where that's going to be. I'm just going to save that. Did I get that right there? I have to wait for it to save. Yeah, that's fine. So, just got to make a note of that. Sorry about that. Yeah, so that's fine. So in terms of Elliott structure, what we're looking for here, we can't see beyond this, is 5 waves up through here. So 1, 2, 3, 4, 5. So I mean, this length here we should get over here as such. I'm looking at it as an A and a B and a C, just being conservative, but it could certainly be wave 1, wave 2 and a wave 3 coming up through here. But if it's wave 3, it's doing all the right things. It's starting to get powerful now. We want to see it remain powerful. In fact, we want to see it more. We want to see it stronger than wave A, because wave A is normally the sharpest in corrections. Normally we talk about, you know, a bullish correction, wave A being sharp like this, wave B, and then wave C a little bit like that here, then pushing up from that point there. So in this case, pushing up here, we'd see the market's come down. So wave A up here is quite sharp here, and wave B would be here. If it was going to be wave C, it would be on a bit of an angle like this, but this is looking quite chirpy here. So it's starting to look like it could be wave 3 here, and if that's the case, then we're well positioned to work this market much higher. So we just a few more sessions and we'll know which one we have in terms of personality and also the structure as well. So we'll just wait and see there. Okay, well, that's it. So thanks for tuning in. Cheers.